What's up everyone, it's Caddy with Money Investing and markets here once again just trading sideways or going down with the Nasdaq here very flat, the S&P 500 down and the Dow Jones selling off over 300 points on the day, dropping over 1% on the day. As always, if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. We talk a lot about fundamental analysis, technical analysis, macroeconomics, and stocks and options as well. And the link to our Discord and Patreon is going to be down below. There is a 16% annual discount available for a limited time, so you can access all the buy and sell alerts, options alerts, trade ideas, and of course, not to mention a lot of private live streams and a lot of other benefits for members as well. So link's going to be down below. So this right here is going to be literally the definition of what the markets are doing. Literally, no doubt, this right here is a one picture representation of what the markets are doing, and that is nothing. Literally nothing. That's nada. Nothing. 0.0% move in Apple today. It was flat. It was literally, it literally closed where it closed on yesterday, right? Yesterday, Monday. But that's no change. Not a single point change on Apple. This right here was the entire market. So Dow Jones obviously selling off a little bit more. S&P 500 also just down about a little bit. Nasdaq here more or less flat, down about 18 basis points. But we have been in this range for such a long time, especially for S&P 500. We've been between 3,800 and 4,200, more specifically 4,000 and 4,200 for such a long time. And this was again the advancers versus decliners. We had over 4,400 stocks declining on the day today. Among those, over 3,600 stocks were somewhere between 0 and 5% down, and very few that were actually going higher, and quite a lot that were not really moving anywhere. There were no change at 0%. That's actually a pretty big number for a number of stocks that were actually flat on the day. Of course, Apple being among one of them. The Dow closes more than 300 points lower on discouraging Home Depot forecasts and debt ceiling concerns. I actually posted a video on Home Depot earlier in the week, so make sure that you do check that out. And we also talked about it during our live stream as well. And stocks dipped Tuesday as investors digested a lackluster forecast from Home Depot, so the forecast wasn't super great. And Wall Street also turned its attention to a meeting between congressional leaders and President Joe Biden on the U.S. debt ceiling, which obviously is going to be very important because Janet Yellen has consistently reaffirmed that the X date is going to be June 1st, which is coming in very soon here. And at that point, of course, the U.S. is not going to be able to pay its debt obligations. It's going to potentially default, which obviously is going to create even more chaos in the market, more volatility, and of course the rates to rise once again. So Bill Mers, Wealth Management Bank, U.S. Bank Wealth Management says, and I quote, "Stocks have really been trading in this 38 to 4,200 range on the S&P 500 since the middle of November, and we're kind of stuck there. I think it's reflective of the uncertainty that investors feel around what will happen on the policy front. How will the economy respond? Will consumers be able to spend through this period, and how long can that last?" This right here is retail sales. Speaking of spending, it did come in a little bit shy of what the expectations were, 0.4% versus the consensus, and ex-vehicle and gas came in at 0.6%, much higher than the consensus. So it was quite an interesting and quite mixed report, and retail sales definitely on a headline basis, on a month-over-month basis, declining from the consensus, but ex-vehicle and gas kind of increasing on a month-over-month basis quite substantially, 3 times more than what the consensus was. So overall, we are at, in my opinion, a very significant point of single failure, and I call this a single failure because it's all dependent on just a handful of names. If it weren't for Google or Amazon or AMD today, Nasdaq would have been brutally down. If it weren't for Apple or Microsoft that were kind of staying up there a little bit, it would have been even worse for the Dow Jones or the S&P 500. So that's where we are. It's just when you have just a few companies keeping the markets afloat, it becomes very challenging for the markets to continue their upward progress, as we discussed already in our previous videos and our live streams. Google here up another 2.5% today, so getting some momentum. Amazon was up close to 2%, AMD pushing up over 4%, so lots of momentum there. And Nvidia had a very interesting inverted hammer candle But hey, it's had this inverted hammer candle so many times, and every single time buyers have stepped in even more aggressively to take it up to new 52-week highs. So we'll talk about that here in just a minute. But energy struggling. I still stand firm on my idea that 2023 is representing of that opportunity of a potential short on energy stocks, something that I've already discussed with all the members. We talked about it at the beginning of this year because energy stocks are still priced as if the oil prices are still at a new high, which they're not. They're down over 40%. And so the earnings and the revenues and everything will consistently decline for these companies as we progress, especially if they're lapping over some very interesting numbers, very strong growth numbers from last year. So the entire energy sector down, utilities were down, consumer defensive lower, healthcare lower, industrials, financials, materials, healthcare, every sector was lower except for communication services, maybe a little bit of cyclicals kind of held up by Amazon, and technology was also pushing higher. So again, this right here is the entire state of the market, and you can kind of see where the strength is versus where it's not, right? It's kind of clear out there, and unfortunately, this is what's creating that single point of failure for the market. Because if tech fails, the market fails. That's where we are right now. There's no support from other parts of the market. You can literally see that on the 1 day, the 1 week, and the 1 month. Just look at it. There's 11 sectors in the S&P 500. 9 out of those 11 sectors were down today. In the last 1 week, again, 8 out of those 11 sectors are down. And in the last 1 month, once again, 8 to 9 sectors are down. In the last 1 month, there's only one that's actually pushed up, and that's comm services. That's the only one on the back of Meta and Google. Volatility here up over 11% on a relative scale. Orange juice pushing higher, lean hogs pushing higher, coffee and oats were down. Then we did have Bitcoin just back over 27,000, Ethereum a little bit over 1,800 at the moment. So going back over to the market, so oil prices once again struggling at that resistance at $73, $74 a barrel, something that we have talked about on the channel before. So we're seeing a little bit of a pullback. Support level is going to stay put at $65, $66 per barrel. And volatility obviously up a little bit over 5% on a relative basis, getting back up to almost 18. Keep in mind, volatility, in my opinion, is brewing. This is all, a big anticipation because U.S. debt ceiling is going to be a big topic of discussion. We've got another Fed meeting coming up in June. Inflation numbers, unemployment, everything's going to start rolling in once again in just about a few weeks. And of course, we've got those, GDP numbers coming out later this month, and earnings are still not over because of the likes of NVIDIA reporting later in this month. May 24th, I think, is when they're reporting. So there's still going to be a lot of things to look forward to in the month of May, even though a lot of it is already over. But volatility right now, very, very sus, just consolidating, pushing up today. But it is brewing, in my opinion, for if things start to break apart, I wouldn't be surprised if volatility starts to kick up a little bit. Now, talking about the yields, so the 10-year yields are a little bit over 3.5%, so slightly down. The markets are open today, but they were, I think, higher. The 6-month is now back over 5.2%. The 3-month and the 6-month are also now inverted in a point where 6 months yielding more than the 3-month, which should really be what's actually should be happening from a more logical standpoint. But now we're seeing the 6-month push up to over 5.2%, the 3 months at 5.2 also, and then we got the 1 year sitting at just under 5%. So we have seen that discrepancy where long duration bonds are yielding less than short duration bonds, and they have moved up even more, and that discrepancy has widened, the spread has widened because of the fact that there is this US debt ceiling kind of uncertainty hanging over our heads, and that's obviously causing more risk to short duration bonds than it is to long duration. So that's where we are, and again, talking a little bit about the S&P 500. So SPX consolidating sideways, and this is literally where we have been since June of last year, not even November. November would be a little bit being reasonable, being generous, but it's really where we have been over the last entire year, and that's where we have gotten rejected, and markets are really just trading sideways on the back of just these tech rallies and other sectors kind of underperforming, and on a net basis, we're slowly and steadily drifting higher, but really just trading sideways for the most part. Talking about the NASDAQ, and again, you can see the IXIC more specifically got a bit of a breakout. Then we saw a sell-off yesterday, and then of course, actually a green day yesterday, and then today we're seeing a bit of a pullback after the market's getting up to as much as 12,400, but then selling right back down. So a little bit of an inverted hammer candle for NASDAQ as well. So you got to be very, very careful, and more specifically, NDX, which starts to feel a little bit more like a more like a rising wedge pattern. So this right here is the QQQs, and we continue to make these higher highs and these higher lows, and then the markets continue to kind of trade inside this very tight channel, where if it gets up to as high as 333, 334, that's going to be a resistance here for us to watch. It's going to make for a nice, decent short opportunity on the downside for the markets for the near term, considering how we would be overbought, trading at a resistance, at a higher high, not to mention tech concentrated rally would run its course, and in my opinion, start to pull right back down. So that's a level to watch at 334 to as much as 342. Those are certain levels to watch for QQQs, but needless to say that we are still very much concentrated. This is going to be the S&P 500, still inside this bear camp and just pulling right back down. And NASDAQ, of course, is starting to break a little bit outside of this bear camp, but the momentum is incredibly weak at the moment. Apple, literally nothing to talk about. Literally nothing. It was flat. 172 closed exactly where it closed yesterday, so no change. And resistance is going to stay put at 177. So this right here is going to be that level to watch for Apple. And support level is going to stay put roughly down to 157, 158. So this right here is going to be that level to watch for Apple moving forward. And I've already made my case for Apple. I think it is a little bit of an expensive valuation at 28, 29, close to 30 times earnings. So for me, buying at these levels just doesn't make sense from a risk reward standpoint, even considering that there is a negative divergence with the RSI. The weekly chart also doesn't look super great, considering how it's starting to become a little bit on the overbought side, both on the RSI and the MACD standpoint. So be careful. Obviously, if you have shares from a long time ago, it might be a good opportunity to sell some calls to hedge your potential downside, or even create some zero cost collars if you're familiar with options trading. But yes, if you are a new investor, like if I were a new investor getting into Apple for the first time, this is not the price that I would love to pay at 172, considering that it's already moved up over 30 to 40%. Talking about Amazon, now Amazon is showing some real signs of strength here. So we are getting up to that resistance. 114 is that resistance level to watch, and the high for the day 114.79. So we're very close to that same level from back in January of 23. So earlier this year we were at that level, then we sold right back down. I think this was right after the earnings were announced. And for the first time in a very long time, Amazon is trying to break outside of its downtrending channel of its lower highs and lower lows, and it's also getting up to its 300 simple moving average, right? So 300 SMA, we're kind of getting back up to that level. That's the white line you see on the chart at 114 exactly, and we haven't traded back above that level since June of last year. So it's been well over a year since Amazon has traded back above the levels. Actually, it's been since back in October of last year, but that was more of a bit of a breakdown for Amazon. So we're trying really hard. Amazon bulls are at work, looking to break above that 300 simple moving average and that resistance of 114. So 114 is going to be the level to watch for Amazon right now. Talking about Tesla, and Elon Musk actually did an interview with CNBC, so I will be listening in on that and share any opinions and perspective on that as well. But right now, just flat, literally no change. 10 basis points, that's how much it's up on the day today. So literally nothing, right? So this is going to be a resistance here, kind of inside this red rectangle in the 166 to 175 level. And of course, we got a support sitting down to 152 to as low as this gap that needs to eventually maybe get filled down in the 140s for Tesla. So again, I think the strategy is very clear. If Tesla sells off, cash secured puts all the way. If Tesla starts rallying, covered calls all the way. Talking about NVIDIA here, and NVIDIA on the day, again, a little bit of an inverted hammer candle. So you can see that we were seeing buyers take NVIDIA all the way up to as much as $298, almost at $300 a share. And then sellers stepped in to bring us right back down below 292, 293. So this right here still acting as a bit of a resistance for NVIDIA at the moment. So it's going to get quite interesting remainder of this week and going into next week into earnings, how NVIDIA trades here, because there's literally so much negative divergence here. This is about as bearish as it gets from a negative divergence standpoint. You can see the RSI continues to make these lower highs, and the price itself somehow manages to make these higher highs. There is so much negative divergence in play at the moment, not to mention that on the weekly chart, we are just absolutely extreme. 75 RSI, and so is the MACD. So it is just gonna get quite interesting how we trade from these levels. Talking about advanced micro devices, had a phenomenal day, up a little bit over 4%, pushing past $101, starting to get a bit of a breakout from these levels. And again, the fair value was at that low 70s, and that's the level that we've been watching. And it did fall down to that level after the earnings, right? It did drop to that level. And AMD, I mean, with the management team, with the products, that everything that they're doing, I've never been more confident in a company, even though they are going through some cyclical weakness, and that's going to be part of the business, that's part of the business cycle. But I think second half of this year, with the optimistic guidance, with the growth guidance, I think they're going to be just fine. I think the AI movement is just getting started for advanced micro devices. Now, I do think that it's not going to be as aggressive, or at least I wouldn't want it to be as aggressive as NVIDIA, because I wouldn't want this company to become extremely overvalued to a point where the bubble keeps on getting bigger and bigger, and the eventual burst is going to be that much catastrophic. So I'd like AMD to kind of move up in a nice and steady fashion. Of course, what I want is not what's going to happen, but just something to keep in mind, because at some point we have to ask ourselves the question: how big are these companies? How much is too big for these companies? And for NVIDIA, I mean, I can't make a case for $800 billion. For Apple, I can't make a case for $3 trillion. Like, these are just insane valuations to begin with. And just like for AMD, I mean, if it gets past 200 billion or 250 billion, I mean, I can't make a case for that either. So, it's gonna get quite interesting, because even though I like these companies and I want them to be successful, I'm bullish, the valuations is what takes hold over everything else, right? If the valuation's too high, if the pricing's too expensive, doesn't matter how good of an asset that is, it's expensive. So resistance right now is going to stay up at 109, close to $110. So this right here is going to be that level to watch. And right now we're seeing a bit of a breakout for advanced micro devices. Talking about PayPal, and PayPal here really struggling even today, down a little bit over 2.3%. So back under $61 at the moment, and the sellers are still active. There is still volume there. A little bit low volume though, 17 million. So it does feel like mostly retail driven on the day today, but we are seeing a little bit of capitulation, a lot of sellers getting exhausted. And that's really what we want to wait and see until all the selling pressure is exhausted and there are some buyers stepping in. So we need to wait for that first bullish engulfing candle where buyers step in that overshadow the previous day's high. So until then, I think there's going to be more downside. There's not really any clear support in sight here, because you can see that we were just on this consistent rally to the upside. Maybe I can put down a support at 57. So that right there is a support that we kind of bounced off of back in July of 2017. So that right there would be the next level to pay attention to. In a brief instant, we could easily be down there because PayPal has been extremely volatile and for the most part on the downside. Square here, consolidating sideways, down a little bit over 2%, and then again continues to trade inside this downtrending channel of lower highs and lower lows, and very much in this very weak pattern, so to speak. We haven't really seen a very consistent move to the upside or to the downside for Square. I mean, overall it's been making lower highs and lower lows, but it's happening that in a very, very tight channel. And support level is going to stay put in the low 50s, so $50 is going to be that level to watch here for Square, of course, moving forward here. Talking a little bit about Meta, and Meta here on the day was again flat, no movement at all. Some of the big tech companies you'll notice didn't really do anything. Meta, Apple, Tesla, even Microsoft was like more or less flat here on the day, so didn't really move much. And Meta here back over 238. So this right here again is the support level that we're watching, and of course the resistance all the way up to as much as 244, 245 for Meta moving forward. Talking about Netflix here, Netflix was down a little bit, so that's the resistance that we have already talked about at close to 347. So this right here, a resistance, and we're now starting to pull right back down, and support level is going to stay put roughly down to as low as the 300 SMA and the support at 275, 276 for Netflix. Google getting very nice momentum on the day, back over $120, now up over $1.5 trillion market cap. A very strong day. Resistance going to stay up at 123. So this right here is going to be that level and that next target to watch for Google. And it is now trading above its 300 simple moving average for the first time since April of 22. So it's been well over a year that Google is now back above its 300 simple moving average. So that is going to be that resistance level to watch, kind of in line from the resistance from back in August of last year. And again, not to mention the other side of the MACD, again, very, very overbought at the moment. So I don't know how long we can depend on Google to take the markets higher. Microsoft here also approaching that resistance here at $312, so getting up to this level. That's a resistance, and of course, not to mention the RSI, the MACD, overbought. So technicals also are screaming, more risk than their reward. And again, on the weekly time frame, same story. RSI is well over 69. MACD's also been pushing higher, and it's now approaching that resistance from back in March of last year as well. And last but not least, we got Shopify. Shopify on the day was slightly lower, down about 2.3%. Again, overbought conditions here. Support level is going to stay put down to $54, $55. Resistance all the way up to that 200 simple moving average at close to $75 per share. So the bottom line is that we are in quite an interesting market dynamics where we are seeing a lot of flat, a lot of consolidation from the market, and a lot of individual stocks are now getting up to their resistances. They're overbought. So how much more room we have upside depends very much on technology stocks. That is, in my opinion, a single point of failure, because if they start to lose steam, if they start rolling over, and if other sectors continue to sell off, it's not going to look good. So I hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Remember that 16% annual discount does expire at the end of this month, so in about a few days. So link's going to be down below if you're interested in joining. As always, happy investing. I'll see you all in the next video.